about bonds are back and the market hates it. The ceasefire is over. Brent back over 90. AI is here. Or is it? Anthropic has 65 billion in annual revenue in July. Nvidia drops 105 billion on Anthropic. We've got a lot to cover. Markets all over the place. We better head roll credits here. So let's do it. Good morning, everybody. Welcome to the State of the Market. I'm Mark Sebastian. I am the founder and CEO of Option Pit. We've got a lot to discuss. Markets are moving. There's a lot of overhanging news, a lot of AI hitting the tape. I'm going to have Hans on here in just a second to talk to us about all these developments in AI over the night and much more. Should be a fun one. But to kick off the show, the S&P 500 is down about 0.5%. The NASDAQ down about 1.5%, a little more than that. The Dow is flat. The Russell down 0.6. And it is a more advancers versus decliners day. RSP is up. That is S&P equal weight. So as bad as the headline indexes look, the overall market is not really taking that much pain. I'll bet if we look sector to sector, you will see, you'll see a lot of green. XLI is down. XLK is down 2.5. But take a look here. I know this is hard to see, but consumer staples up, utilities up, healthcare up, consumer discretionary up, retail is up, communications is flat, materials is flat, housing down. Not a big surprise with rates moving. And energy is up and financials are up. So most of the market is up except big tech. Big tech. And why? Well, those rates continue to befuddle the market. The 30-year is now over 5.3%. The 10-year, 4.72. You have to go back to the Bush administration. Bush 2. To find rates like this. That is how far back you have to go. So think about what rates like this led to, eventually in 2008. I'm not saying that's coming, but this rate thing is like it kind of chasing us like Michael Myers or Jason. Are you into horror movies? I'm going to go out on a limb and say yes. All right. So what's the one thing about Jason Voorhees or Michael Myers?
They keep chasing you forever and never stop, regardless of what happens.
Right. And they never run. They walk.
That's true.
And yet they somehow, they never run. You never see them run, right? You got Jamie Lee Curtis. She's running. It's young Jamie. Her hair is all over the place. Running from Michael Myers. And you just see him walking, and all of a sudden, there he is. He shows up. And that's kind of what the market is up against with this market. This is a Michael Myers bond thing. And stocks may try and run away for a long time, but
actually, Mark,
until
you're forgetting that it's also because he's so big. One of his steps is like 10 of hers.
Oh, there's that too.
So
yes.
Could you apply that to the market maybe?
You know what? That's incredibly insightful. It's a big lumbering beast coming to destroy the market. That just happens to not being wearing a hockey mask. Instead, it's wearing, green notes promising you stuff that will never be repaid. So the bond market's a real problem. And You are seeing that, and it's kind of the one piece leading into this week that I thought could be an issue was the bond market, and I felt pretty good about the market moving higher. But this bond blow up is a real thing, and you're seeing it get into VIX now. VIX still pricing about 1587. The September future expires tomorrow, and you've got a really nice spread between September and VIX and the VIX cash. They're bracing themselves. VIX futures have been doing this. They've been wrong for a very long time, but they are bracing themselves for a move higher. We just haven't gotten it. But the issue you're running into is you have bonds going up, and I could show you the the US 10-year yield. We got to 475 this morning. Like, those are 5% on the 10-year is going to be a problem. And it's coming from oil. Oil, the Colgate Palmolive. Crude futures still hanging around 84. Brent is over 90. Remember, Brent is what Japan is dealing with. And that is going to put some pressure on JPY. And you can see it's been in basically consistent decline since we ended that intervention. We've swallowed back most of this pop. So, we have the Middle East melting down. Ceasefire's over. Who knows what's going on? You have the Hormuz closed. You have Houthis shooting at other oil tankers. It is a free-for-all over there, and it is directly going to the bond market, which then kind of has a ripple effect across Japan and into the U.S. markets. And with bond yields going up and Japanese yields and the spread widening between U.S. and Japanese yields, you get more of the carry trade being thrown on. At a certain point, it will blow up in their face the other way. It just isn't happening right now. Do I still like my VIX 15 puts into tomorrow? Is probably a question you're asking me. Well, they're now back to 4 cents. Maybe I should have taken a profit at 16. But we'll see how the day goes. If the markets can recover and we go green, you'll see VIX get slammed. They already want to do that. The NASDAQ is down almost, 1.6%. VIX is barely reacting. That's, to me, we might catch a little bit of a bid in the afternoon. All right, so Goldman was out with a story yesterday, and the crux of their position was, we have yet to see any real AI productivity savings get into the market yet. We're just starting to see that. We have yet to really see the boom in productivity, but it's coming. It was if you are not bullish the economy, or bullish AI, here are the things we're seeing and just starting to see hit the economy. So Goldman was basically out saying, AI is just starting to have its effects. So we don't know what this economy looks like in a year. Is Goldman right or wrong? You know who's got the answer? He is our head of income trading and our resident AI expert. He is Hans Albrecht. Good morning, Hans.
Good morning, Mark, and good morning, everybody.
Yeah, I don't know. Did you get a chance to read that note from Goldman? It was bullish there, but they're basically saying, like, you're just at the tip of the iceberg, and maybe even not that.
Yeah,
You
and
know, we're
exactly,
just
Mark. And
starting to
like I
see this
said
game.
last week, if you know, are we in the first inning? And as I joked last week, we're just hitting the snooze button and thinking about what breakfast cereal to eat. So we're really early. And this kind of reminds me, I mean, you can always take news, not always, but you can take news two ways, right? And I remember last year they talked about how, 90% of companies expressed that they couldn't figure out how to make AI work, and everybody panicked. And I said, what are you talking about? Nobody's even using this stuff. They're just starting to learn how to use this stuff. I think, I love listening to certain bears out there because it's always fun. The bear porn is fun sometimes to listen to, but these guys who claim that AI is not moving the needle, 100 billion plus in ARR for Anthropic and OpenAI begs to differ. And I think, maybe those companies, we're going to be doing a really big Anthropic event, folks, so pay attention for that. But man, people are just getting going on this. We're just getting going on agentic. We're just getting going. We haven't even started. If we're hitting the snooze button on usage for enterprise in robotics and automation, it's like 1 a.m. and we're fast asleep. So we're just getting going, Mark.
Yeah, and maybe something pointing to that was the news that hit last night about Anthropic. Their annualized revenue in July would have been $65 billion. So that's annualized. So in July, they made, they made a little like $5.5 billion bucks in rev. What's your reaction to that? I mean, it's clearly growing. Is that a quick move? Like, where were they 3 months ago, 6 months ago, and are we in that hockey stick part? I guess this is really my question. Are we in the hockey stick, the true ramp up, the true exponential gain portion of that AI revenue? Is that what they were saying yesterday?
Well, it really is telling you that the demand is very big. So I think there's two parts to that question mark, which is number one, we know the demand for AI, the demand, which is another way we always hear demand for compute. What does that mean? Well, the demand for AI, demand for inference, putting it to work for us. That is at a stage where the horse is just leaving the barn, right? Now, the other side of it is who's going to make money from this. And so it's, we see these big numbers that annualized revenue rate going bananas, like nothing we've ever seen in history. Now, can they make money from that? Well, it's always nice to say, well, we're making all this money, but we're not going to include any of our costs. So it's going to be fascinating to see some of the details that come out surrounding this IPO at some point, because as we know, the cheaper chicken Chinese models, I call it the cheaper chicken from Father of the Bride, that stuff is getting better and better. And it's almost on a daily basis, Mark. There's a great model that's as good as like Opus, like one of the recent models, and it runs on like 16 gigs. So you're going to start being able to run very, very good AIs on a relatively modest machine soon. What does that mean for Anthropic and OpenAI and companies like that are really trying to sell that intelligence layer for tons of money? Well, we already know what it means because we're seeing them cut prices. OpenAI cut one of their models by like 80%. So they're in an area that's being commoditized. I think that's a challenge for them. But I think overall, to what you're speaking about, is it shows that the demand is just starting to explode.
Okay. Yeah. Now, the second AI story, I thought this was kind of interesting. OpenAI is going to build a $105 billion data center, I believe, in Ohio, and NVIDIA is putting up the money, a chunk of the money. Is this the first use of their lending facility, or is this coming directly from NVIDIA? And that seems like a massive amount for a data center. What was your reaction when you saw that figure? And like, are they building a new city? Is that what's happening here?
Well, I think it speaks to not just the demand that's out there, but the sort of urgency that I think people feel. And I think some of that is probably coming from very top levels from the government saying, listen, we got to keep things going. We have to keep up with the Joneses. We got to keep up with the Chinese and everybody else. And so there's this, and there's pushback, right? So two things I would say to that is I think we need to fulfill the demand for compute that's coming. And as we talked about, it's just kind of getting going, agentic, all this stuff. On the other hand, we have pushback, and so people don't want this stuff in their backyards, and I believe we're going to have bottlenecks of a physical kind and also financial. You were talking about yields. Look at the long-term yield; it just keeps pushing up. I think that's rather sticky because I don't think this ends anytime soon. People keep borrowing more and more and more. And then the other little footnote I would say to that is, even the build out there is a bit of risk to that. We know that Elon can build this stuff for cheaper, faster. There's going to be a competitiveness out there, and SpaceX is a new hyperscaler. They have been added to the mix of hyperscalers that we know and love, and I think they're going to be doing things very well. So I think it's a very competitive space. It is a lot of money. And the fact is that we need to spend it because, as we always talk about, we're building the skyscraper and we keep adding more floors to it and it keeps selling out. And we keep adding more floors and it keeps selling out. That's the level of compute demand out there.
Yeah, I mean, and then we had that news on Meta last week. It's obviously kind of rolled back over. Two areas I want to ask you about. Meta had that nice pop on running out compute. They also said they're going to go open model. It has, rolled over a decent amount and is now approaching the lows from, its post earnings dive and the lows from March. Is there a level where this one starts to look compelling, or are we Google, Anthropic, OpenAI, Microsoft all the way? Like, does Meta have a place in this arena?
I mean, I think they've got some problems. There's the court case. There's the addictive nature of what they do to children, to young folks, which is just a big surprise to everyone. Boy, what a surprise that that's hitting all the dopamine receptors. They're going bing, 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 like in a casino. So and look, it's not just young people. We all succumb to that, to that part of it. But I think Meta is just an example of, last time we talked about it, Mark, after the earnings, it was 525, 530. And we talked about where we could buy it. And I said, probably right here. Now, I didn't think it would run up 80, 90 bucks. And we're pulling back here because, number one, I think Meta is a bit of a mess. I think Zuck is just kind of throwing it at the wall and trying to figure out what he's doing. First, he needs all this compute to create products. Now he's reselling it, which I can't blame him for, because as we see compute rates, it's going to be interesting when we see compute futures, because I think compute is going to be almost like a new oil. You're going to see people, if we have these physical bottlenecks and pushback and all this stuff that we're seeing, there could come a point where people who have built are sitting on this kind of gold mine. So I think that's what the hyperscalers, the Googles, and all these guys have going for them, is that they're going to be sitting on this gold mine. The negative is that they got to keep spending hundreds of trillions of dollars to kind of get this done, and that's a tough spot. And I think Meta is kind of an example of, they don't really have the ecosystem that Google, Microsoft, Amazon have, and I don't think investors like that.
And that brings me back to Riot and that Anthropic deal, and makes me wonder whether some of these miners are going to be interesting investments down here. They own.
I think they could
Bitcoin,
be more,
but they also have all that compute. Riot's done nothing out of this compute story. It's kind of an interesting one. Now, Hans, these are the type of discussions that we have in our. There's a little channel where the five of us chat throughout the day, and then when Hannah or some of the other people that work here have questions about markets, they go in there and ask us, and we all break it down. So Hans sat down and wrote a kind of a full breakdown of where he sees AI going, where the opportunity is, the full narrative as he sees it in AI. And initially this was just something for myself and Andrew and Hannah to look at, something we were going to try and use to help us, figure out what our next stocks we're going to trade. It turned out so impressive and useful that we are going to be giving this to everybody for free. We're going to be sending this to you. It's going to be sent to you, I believe, tomorrow, maybe today. But I want you guys to be on the lookout. Hans, did I sum that up pretty well? Why should somebody want to read this this in-depth document that you've written?
Well, I mean, I think this is as I've been calling it for a long time, the ultimate age of disruption. And I think it's important for you folks out there to really kind of make sure that you're understanding the broad theme and then moving your way down to sort of more micro individual stocks, individual sectors and things like that. And you really want to understand where this AI theme is going, because it's not as obvious as it was before when it was just, okay, buy all the mag stocks and everybody's going to have fun. This is a place where you really have the buyers, the spenders, and you have the recipients. So you have this massive spending boom to build out this infrastructure that's like retiling the earth, and you have the companies that are benefiting from that. And SpaceX is a little bit of both. That's why it's kind of an interesting, nuanced company, that it does a little bit of both. And I think Anthropic is a very different company. So I had a lot of fun kind of looking at both of those companies and how we should view those IPOs, because they're drastically different kinds of IPOs because of the underlying companies, with different, I believe, very different outcomes potentially over the next 5 and 10 years. And that's how you guys have to be looking at things. You can see this market as saying it's thinking in binary terms. Remember when software crushed, because everyone sort of said, well, I don't know where Adobe's going to be in 7 years. I don't know where it's going to be in 2 years, let alone 7 years. You've got to wrap your head around, where's this market going over the next few years, who benefits and who is going to, and who may suffer. And you've got to pay attention. And that's what we're here to help you guys do. And this report is one of the best things I've ever produced. And I want you guys to have it, because it's going to help frame, as I've been helping you do for a year, help frame where the world is going, and as a result, where investing is going.
Yeah. So this is just something we're going to send to you. Take the time to read it.
Mark, are you on mute, or is it me?
Oh. I don't know. Can you hear me?
Yeah, you're good, Mark. It's
all right.
Nice.
So
I can hear you now.
the Anthropic IPO is going to be potentially the biggest IPO ever, and SpaceX would be the other one, and they're both kind of allegedly the future, and you've broken everything down. This is going to be worth your time, because it's going to really open everybody here's eyes to kind of what the next 6 months and maybe 6 years are going to look like. So be on the lookout for that. Now, the other interesting piece of news around you, you have your dividend portfolio. It's something that you produce for people, and it's a portfolio of stocks that you really like owning. They all paid nice dividends, and it's performed really well. You're going to do your first option trade for this dividend portfolio.
Very first option trade coming, guys, because dividends are income. And I believe the underlying story, as you guys probably can figure out by now, is very, very important. I don't always go to yield. As I have said, I'm always trying to think of, well, who's gonna win out in the long run. One great example was Diageo versus Constellation Brands. Diageo owns the trophy brands. Constellation Brands is a little bit more kind of the run-of-the-mill drinkers. And I think those are very big differences. Look at the Lakers, just sold for $12.5 billion.
Yeah.
People are going to want to own trophies. So you want to really, just what I just said 5 minutes ago applies to your other parts of your portfolio. That's why we're running the dividend portfolio so very well. And there isn't just dividend on the income side. There is also the potential for option income, which, of course, as the head of option income, is something that I do very well. And I want you guys to experience how you can take advantage of both slivers of income in a portfolio like this.
Hans, you're 6'5", but you always like to sell yourself short. You have not just done very well. You've done excellent running that income portfolio, and access to this dividend portfolio is not $7 a month. It's not $7 a quarter. It's $7 for a year. So the barriers to entry. I mean, I went. It was Valentino's last day of school yesterday, so he wanted to go to McDonald's place. I was like, okay, you want to go to McDonald's place? I bought him 10 chicken nuggets, a McFlurry, and I had a quarter pounder and a drink, and it was $20. I'm going to tell you, Hans, your $7 a year dividend portfolio sounds much more satisfying than my stale bun, undercooked quarter pounder with cheese that I had yesterday.
Mark, let me tell you,
down to
we're selling
McDonald's
this thing
in
$7 a year.
Texas. Yeah.
I just put a comment in the complaint box at Option Pit because we're not selling that for $7 for much longer. That is absolute. I want to raise, and that's not gonna. I'm not gonna get it by selling this thing for $7. So guys, jump on, grab it. You are locked in. $7. You're gonna get insight from me that you're not gonna find anywhere else. Let's do it.
Yes, absolutely. So folks, they've just dropped the link to the dividend portfolio there, and we're going to be sending you this SpaceX Anthropic AI breakdown from Hans just for being a member of Option Pit. So folks on YouTube, folks on X, if you're not a member, if you're not joining the hundreds of people that are here live at optionpit.com every day, that's the only way to get access to this report that Hans has written. So shoot the team an email, support@optionpit.com, and join us. All right. So Hans, thank you very much for kind of your insight on the AI. Thank you for the meta breakdown. Thank you for writing this SpaceX Anthropic AI report. And thank you for your $7 portfolio that is going to be having its first option trade here very shortly. So jump in and jump at that $7 a year charge, folks. So folks, once again, click that link and join Hans. Be on the lookout in your emails. Hans, thank you so much for your time this morning. Folks, Hans Albrecht, our director of income trading here at Option Pit. I am Mark Sebastian. I am your only option. I will see you tomorrow at 10 a.m. Well, Andrew will see you tomorrow at 10 a.m. So we'll see you guys then. Thank you for being here. Thank you for your time. And as always, thank you, Amin. Have a good one.